Good afternoon. My name is Salvador Garcia. Jose Juarez and myself will be presenting an executive summary for Duff & Phelps Corporation. Duff & Phelps Corporation is a leading provider of independent financial advisory and investment banking services. The firm balances analytical skills, market insight, and independence to provide expertise in the areas of valuation, transactions, financial restructuring, alternative assets, disputes, and taxation. Currently, Duff & Phelps has 25 offices around the world. Right here, we have Duff & Phelps balance sheet. As you can see, we had a big decline in cash and cash equivalents from 2010 to 2011. This was mainly due because of an increase in unbilled services and an increase in accounts receivables. If you look further down, we also had a big increase in goodwill, which was the cause of a transaction in which we bought a UK-based investment bank. Additionally, we had an increase in about $51 million to our total assets. Right here we have our current liabilities and our long-term liabilities. As you can see, we had an increase in total current liabilities between 2010 to 2011, approximately a $10 million increase. And we also had a long-term liabilities increase from $60 million to $32 million. Mostly due to an issuance of long-term bonds. Right here we have our stockholders' equity. As you can see, our stockholders' equity increased from 342 million to 363 million. This is mostly due to an increase in retained earnings.
Good afternoon. I'm Jose Juarez, and we'll be presenting the cash flow statement. And as we can see from operating activities, we saw about a $12 million decline, mainly due, as mentioned before, the accounts receivable and unbilled services due to these cash flow activities. And as far as cash flows from investing activities, we have a negative cash flow. As mentioned before, the acquisition of the UK-based investment bank, MCR, was approximately $53.4 million. As we see, that was the acquisition. Cash flows from financing activities is also a negative cash flow, mainly due part because of the repurchase of common shares of Duff & Phelps. And as we can see here, as far as the net income, we actually had an increase in net income from last year, mainly due to a very aggressive tax management approach. Paid approximately $10.4 million in taxes last year, as opposed to this year only paying $5.5 million.
Right here we have a performance chart for Duff & Phelps stock from the initial public offering till current. As you can see, from the IPO till today, we had a 23% decrease in our stock's price, but compared to the same industry, we have outperformed.
So currently listed are these financial metrics concerning earnings per share, PE ratios. These are basically the analyst estimates as far as 2010, 2011, up to December 2013 is concerned. We currently had an earnings per share estimate of 17 cents per share. Our actual earnings per share was 16 cents. We underperformed about a penny off from analyst estimates. We also just recently announced a 60-cent dividend back in February 15th. And in turn, the stock price went up about 5%, and it's currently trading at its 52-week range as far as the growth it's had. And as we can see here, as mentioned before, we've outperformed the sector as well as the S&P 500 gross estimates for the company are around 31%, S&P around 16%. Thank you.